Data today shows Japan's economy slipped into recession for the second time since Prime Minister Shinzo Abe came to power nearly 3 years ago, shrinking 0.2% in the July-September period. I'm joined now by Joshua Mahony, market analyst with IG, to discuss what this technical recession indicates for the Japanese economy. So Joshua, while GDP marked the second straight quarter of contraction, mainly due to declines in inventory and increases in imports driven by growing final demand, is this reading as pessimistic as it appears, or is there potential for pickup?
Well, this is the fifth time that we've seen Japan fall into recession since the 2008 crisis. But if you look at the numbers on the previous times it's dropped into technical recession, the previous ones have been a lot harsher than this current one. It was minus 0.2%. Prior to that, minus 0.3%. Now, with some of the other recessions we've seen, they've been more like minus 1%. So I would say that this is a lot more of a mild recession, so to speak, and therefore, possibly it wouldn't be as much of a worry. The thing is that it's a lot of this is driven by what's happening in China, being their main export market, of course, and so putting a timeline on that is always going to be quite difficult because we don't know necessarily how long this slowdown in China is going to last for. I'd say that within Japan, sort of the main issue has been down the years has been to do with confidence and expectation. So previously it was always about, did they think that inflation was going to rise? And did they have the confidence and expectation that that would happen? If they did, then they'd be paying more wages and therefore, inflation would happen. People didn't have that expectation or confidence that it would happen, so we saw inflation remain very low. Now we're seeing the same kind of thing, but in terms of CapEx, which is one of the main things that's come out today, that capital expenditure within firms is actually very low, falling back. And I think a lot of it's to do with the fact that, you've just seen GDP reading come out negative. Well, what's really spurring people on to have the confidence to be able to say, actually, we're going to spend money and invest within an economy that is now, for the fifth time in around about 7 years, back in recession.
Given the figure we've seen today, underlining the downside risks to the Bank of Japan's growth forecasts, do you think they will consider further monetary stimulus? If so, when do you think this could go ahead?
So, the last time that I heard from the Bank of Japan, I thought they were relatively hawkish, considering everyone's sort of expecting that they will come in with further easing. But the question is, I guess, is the steps that they're taking at the moment, is that even really working? Because we're not necessarily seeing a great pickup in terms of inflation. We're not seeing a great pickup in terms of growth because we've got negative growth. We've got inflation at 0% year on year. Those are the main two factors that you'd expect to impact decision-making at the Bank of Japan, inflation and growth, and neither of them are particularly good. So along that line, you would expect them to take some sort of action near term. I don't think they'll necessarily take it on Thursday. Of course, that's certainly a chance, but just given the tone they had last time I heard them, I'd probably say makes more sense in the following month. But then again, there is a feeling within many central bankers that if you have markets fully, especially in Japan, if you have markets fully factoring in their decision, and by the time they make the decision, it doesn't actually make the kind of impact that they'd want to make. So that's some sort of argument that we could possibly see something on Thursday. But I do think they will take some sort of action near term. But as I said, the question is whether that's particularly going to be enough for the economy, and therefore it's likely that even if the Bank of Japan do make a move, they're likely to see some sort of investment plan put together by the government to sort of put a fiscal edge on it, not just the monetary policy side.
Now, today's figures are subject to revision as we get a second release due in 2 weeks' time. Do you think we'll see much revision in this reading?
Yeah, actually, historically, it has tended to be revised both up and down, but the sort of trend that we've been seeing recently is that it gets revised down. So 2 of the last 7 readings have been revised lower. So whilst we could see a revision, I don't necessarily think that we're going to see a revision towards the upside to be able to push it back out of negative growth. I think the sort of trajectory of growth at the moment and the way that it's been, it's probably more likely we could actually see it revised lower. And possibly that would be the kind of thing that actually would push the Bank of Japan, that currently they're thinking, okay, we knew that we've not been having a good time, China's been suffering, but, we're only moderately in negative GDP.
That was Joshua Mahony with me there, looking at Japan's fifth fall into recession since 2008. That's all from me for now. Thanks for tuning in, and remember to keep clicking back.